I hate to be the bearer of bad news, but I just have to share the harsh truth about Ripple's XRP token and why it might take longer than you think for it to reach the price target you've probably been hoping for. Now, before I get a bunch of hate in the comments below, know that I am extremely bullish on XRP's technology, adoption, attention, speed, and even its potential to make some crazy gains. But in past videos, I've explained how I could see XRP token reaching the $11 to $14 range. Still, the biggest news of the year surrounding the SEC lawsuit settlement of $125 million failed to push the price above the 64-cent range, and arguably couldn't even touch the 75-cent range, which is our previous resistance high. So in this video, I'll be covering the latest news in the world of crypto, like how the meeting at the White House went between crypto-friendly Congressman Ro Khanna, and then people from Coinbase, Ripple, Kraken, Mark Cuban, and more. We'll be covering Jerome Powell and how he's hinted at the fact that he might not wait to lower interest rates if we don't reach our 2% target, and how that's going to affect markets based on data and history. We'll be covering what Michael Hartnett, the chief investment strategist over at Bank of America, has to say about interest rates, the markets, that's got investors on edge. And by the end of this video, I'll be sharing the key mistake most people will make that could put them out to pasture and basically make themselves extremely pissed off that they did this. Last, before we begin the video, head on over to bullrunners.com, grab the link in the description below to subscribe and learn how to take advantage of this all market solution. You're going to be able to put your XRP to work to earn crypto by playing the #1 play to earn XRP game. Okay, this takes no more than about 10 minutes per day, and ultimately it's a great way to hedge against some risk or volatility while at the same time stacking to your bags before the major bull run. So it truly is the all market solution if you are already holding XRP or plan to. So if you're feeling blessed and bullish, comment 777, and if you're going to be the richest person in your family tree, smash the subscribe button. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. Now, this is some pretty big news that we've actually been covering on the channel over the last couple of days, as a lot of people in the crypto space basically voiced their concerns and frustrations with the Biden administration and how since 2022 they failed to take action when they actually did say they would, with the Terra Luna crash and then the Sam Bankman-Fried saga with FTX and that collapse. They're like, we're going to get on it, and then they did nothing. And then the SEC continued to pursue legal action against companies like Coinbase and Ripple, where Coinbase was already registered with the SEC to become a public company. So it's pretty silly. There's just been a lot of back and forth in this administration, which speaks levels to the incompetence. Now, that said, I did accidentally say Congressman, but I meant House Representative Ro Khanna is hinting at a positive Democrat crypto regulation update after meeting with the Biden administration. Pro-Bitcoin Democrat House Representative and lawyer Ro Khanna expects the Biden administration to release a crypto regulation roadmap in the coming weeks, and I would argue this is probably because they're feeling pressure coming close to that election time, that if they don't, right, crypto-friendly people and people that hold crypto are not going to be so keen on voting for Kamala Harris. So that's the reason I feel they're taking that approach and feeling the pressure. But that speaks volumes about what they're willing to do to get elected. But then once elected, they don't really do that much, right? So again, I like to watch what people do. I don't listen to what they say. But here's what he said. I'm hopeful that as a consequence of these meetings, the administration will issue a positive statement in the coming weeks with a roadmap signaling the path toward reasonable regulation. And again, right, we saw Ripple, Kraken, Circle, Paxos, Mark Cuban, Scaramucci, Mike Novogratz, some major players over there. And many reports have said they were really just roasting the administration. But now Ro Khanna's coming out and saying we think we're going to have something on the table here soon. Reports from these meetings revealed that the crypto stakeholders decried President Joe Biden's administration's hostile approach to the emerging industry. However, the participants and government officials ended up with a positive perspective on how the sector could be allowed to thrive. Now, a lot of people are basically saying they're unconvinced. In some cases, they're saying, I wonder if that means the Harris team is not interested in Bitcoin miners participating in the discussion and therefore, by inference, not interested in Bitcoin mining in the US. In other words, a lot of people simply don't believe that they're truly going to be crypto friendly. They believe they're just going to say things that people want to hear to garner a vote. Now, one of the major reasons people believe we are in for some more downside in the markets, and that something like XRP might be struggling to break out above its previous resistance at 64 to 60 or 70 cents and maintain any real strong price action, is because there are a lot of negative economic indicators. One of those being the yield curve on bonds, and we're talking the 2-year and 10-year. So the 2-year government bond is this red line. The 10-year government bond is this green line. Merry Christmas. Now, typically, whenever they invert, in other words, the interest or the yield that you would gain on the 2-year crosses over and earns you more interest than you would on the 10-year. This is pretty indicative of an incoming recession. And then typically when the 3-month crosses over the 10-year, it's like, okay, recession time is here. Now, for the first time in history since July of 2022, for more than 2 years, we've had a yield curve inversion. So here we have a chart of the 10-year divided by the 2-year, and you'll notice that we get these big old spikes, and these spikes are pretty correlated with a positive or a healthy market environment. And then on the flip side, when things start to come back down and hit this green line, which is 1%, essentially where we get the inversion and the crossover, that is where it's kind of signaling that we're in for a potential recession. And this is a very accurate indicator typically, except for this time around. So you'll see right back here in 05 all the way through 07, we had a yield curve inversion below the line. Then it crossed over, and this is when markets really started to tank. In similar fashion, we got very close in October to November of 2019, right before the market crashed with COVID. Eerily weird, right? The timing of that. Well, since this point in time, we've had a gnarly yield curve inversion, and the bond markets have been signaling that we were in for a large recession a long time ago. So as you can see right here, I have a chart now of the S&P 500. And when we had this yield curve inversion, it wasn't like the markets were over in terms of their upside, but in this time frame, it would have been a good time to take profits. Then as the yield started reverting back to a normalized range right here, you can see that markets started to drop. Well, in similar fashion, it happened back here, right? You can see that we had a yield curve inversion for a very short while. Markets continued rallying, then we broke back up above the green line, and then markets tanked heavily, and this was the crash that happened during COVID. Well, now we are in a range where markets have been pumping, right? Yield curve has consistently been inverted, and for the first time, we're starting to come back into this range. So as we come back up and yields start to normalize, that would typically be indicative of the market starting to go down. Then you have the level of uncertainty in the markets around the interest rate cut. Now, typically, it would be, counterintuitive for you to think, the markets are going to dump once they cut interest rates. If anything, when they start cutting interest rates, it's going to stimulate economic activity. The markets might be more excited. They might start borrowing more. They might start expanding their operations. But that's not typically what history shows us. Still, right, people are kind of nervous about this first rate cut. And the reason is because we don't know what they're going to cut the rates on. Is it going to be 25 basis points, 50 basis points, 75 basis points? How is Jerome Powell actually going to deal with this sticky situation that we're in? Here's an article from Motley Fool that says the Federal Reserve Chair Jerome Powell has mentioned two factors that could lead to interest rate cuts. One is that inflation declines near to the Fed's 2% goal. Now, inflation has remained relatively sticky. I think we're currently at about 3%. We failed to break below that range on any serious time frame for the last couple of years as we hit the all-time high of like 9.1%. And so to make a long story short, I don't see us hitting that 2% target this next time around. We might hit like 2.6, 2.7, which would be a very positive reading, which would send the markets flying a little bit higher, if you will. The other factor is that there is a weakening job market. And so now we're starting to see unemployment climb, and that can be kind of scary for markets. Both boxes have now been checked off. The Fed's favorite inflation metric, the personal consumption expenditures PCE price index, fell to 2.5% in June. July jobs numbers were weaker than expected. So I was referring to the core CPI here. On the 2% goal. The probability of a near-term interest rate cut has risen, but will the stock market soar if the Fed rate cuts in September? And right now, the market is actually pretty split on what's going to happen. Virtually all, or the majority, believe we are going to experience a rate cut in September. And if we don't, I think that's going to be a very poor signal to markets. So that said, just over 48% of people are expecting the central bank to lower borrowing costs by 25 basis points, while nearly 52% are forecasting a 50 basis point cut. However, if you go over to Polymarket, the betting market looks slightly different. About 63% of people are pricing in a 25 basis point rate cut, while 33% are pricing in a 50 basis point rate cut. And I personally believe that the Fed will have a good excuse based on the lowered inflation rates, based on where we're at in terms of jobs, to cut rates by 50 basis points. I think that's going to be the target. That's probably going to be the general market expectation. And if that happens, I think that's going to be within the realm of believability. It's not going to throw things off too much. I don't think too many investors are going to look or think two ways about it. So if any of these things happen, if we see the yield curve come back over into a normalized yield zone, and then what we see is the Fed come in and cut rates between 25 to 50 basis points, that's actually typically an indication that markets are looking relatively weak, and more often than not, we should be selling into the first rate cut according to market history. And we'll get into that here shortly with what Michael Hartnett has to share about it, the chief strategist over at BofA. But it's very much possible with all of this weak economic data and the markets continuing to lag and potentially drop, that XRP might not see a new all-time high, this next couple of months, maybe even not by the end of the year through the election. It is very much possible that it might take through 2025 or into 2026 to see some new all-time highs. And I know that's not what everyone wants to hear. So the best thing most XRP holders can do is accumulate. If you are a true believer, if you are a fan of the team, the technology, the future that they have, accumulate between the ranges of right now down to 47 cents or even 30 cents. I think those are insanely good places to accumulate and dollar cost average into. But still, whatever happens, that's why it's so important to diversify your opportunities a bit and potentially look at other cryptos, right? XRP isn't the only crypto, which is why I recommend you head on over to DeFi Tech, DEFI.tech, TECH. H, because this is a company that offers exposure to digital assets through ETPs, an exchange traded product. This is an institutional grade regulated way to get access to single-sided crypto tokens. And the reason this is so cool and important is because a lot of people have their money stocked away in some stock exchange with a brokerage, especially if you're more of an institutional player or you have a lot of money. And playing around in the DeFi space, buying all these tokens through random DeFi wallets gets pretty messy, especially when it comes to tax season, which is why I love the simplicity. This is a clear and accelerated market, or there is a clear and accelerated market demand from retail and specifically institutions that are unable to hold digital assets directly. And those are the major reasons. I've dealt with tax time when it comes to DeFi. It is a total mess. And so it's a heck of a lot easier and more convenient to do it in a regulated manner through one of their ETPs. Now, DeFi Tech is the parent company to a company called Valor. Okay, right here, VALOUR.com, where you can get access to these ETPs. They currently have about $609 million of assets under management, about 30 ETPs listed on 6 different exchanges. And here are some of the ETPs that they offer that are single-sided assets like Avalanche, like Binance Token, Chainlink, Cardano, Engine, Hedera, ICP, Polkadot, Near, Solana, Ripple, you name it, Uniswap. So if you want to get access to these tokens in a truly regulated manner, this is the way that I would go about it. And so here on the channel, we do believe that there is a major opportunity to invest in companies like this or have our money involved with companies like this, because as the Internet of Things grows and as more institutions want access to Web3 and digital assets, they're going to go and use companies like Valor to do it, which is why we wanted to partner with DeFi.Tech and Valor to sponsor this video. So shout out to them for sponsoring the video. Now let's dig into who's behind the team and some potential for the stock here itself. So right here we have a stacked team with deep history in the financial space and a lot of experience. The two people that I'm going to profile today, because we've already talked about Anthony Pompliano and how much influence he has in the crypto sector, is Oliver Russi-Newton, who's the co-founder and CEO, alongside Russell Starr, which we're going to hear from just in a second. Now, Wall Street Journal did a little profile on Oliver, the CEO, and he is an entrepreneur who's founded 7 companies, including Hive Digital Technologies. So he knows a thing or two about crypto to begin with, DeFi Technologies, and EV Technology Group, and he's been at the head of 8 different companies. Then in 2021, they made a really good decision in hiring Russell Starr. Mr. Starr is also a co-founder and part owner of Echelon Wealth Partners, a large Canadian investment dealer. So this guy has deep connections and is able to move the ball forward here. As the company continues to grow and get more institutional clients and more AUM, the stock should do really well. After leaving Bay Street, Mr. Starr has also held executive positions and board roles with numerous TSX and TSXV listed companies. And here is a video directly taken from their recent earnings call. Russell Starr is talking about the potential for this stock and the future of the company.
And everyone really needs to take a minute to think through what Ollie said, in my opinion. 99% of, everyone really needs to take a minute to think through what Ollie said, in my opinion. 99% of the world's companies trade at 20 times profits. We are trading at 3 times profits. If you're not getting reasonable valuation from the market on your stock, of course you look at ways to improve that. And if you're trading at 3 times, like I mentioned, someone could pay a 300% premium to us, and it would be a take under relative to any other stock trading in the US. Therein lies the opportunity from an ownership perspective and why you should be buying stock. But it creates a lot of fear in our heads, at least it does mine, because I'm not. We all like I've said this repeatedly between all the Johan friends family, me friends family, and very closely related parties. We control probably 100 120 million shares. We're not looking for $3 on this stock or $4, especially in an environment that we're looking at now. We're looking at 8 to 10, which sounds far-fetched, but 5, 6, 7 is where we should be trading just on a reasonable comp basis. And that's not me making things up. Just go look at what all of the other crypto companies are trading for. I'm not sure any of them are profitable. They're trading on revenue multiples.
And Russell Starr and the team ain't playing no games. I think we're really on to something here with this stock. Just looking at the stock in and of itself, it has been in a very strong uptrend since August of 2023 to present day. It dumped to a low of literally 5 cents, currently sitting at about $1.51. Its previous all-time highs were over here at about $3.51. Based on the current trend, listen, I know a bit of technical analysis, but when I see a stock looking this strong, I want to find a good place to enter. And the reality is he just told you something about their numbers and where 99% of stocks in the US actually trade based on revenues and earnings. Well, this guy is sitting at about 3 times, which is just insane. In other words, even at about a $3.50 price, it's still undervalued. And it's been performing really well. It's consistently traded above the 10 and 20 EMA on a daily time frame. Currently, we're seeing support at that 20 EMA, which is the red line. So that's something that you definitely like to see. And I would argue it's probably a good time to start looking at the stock seriously if you've been thinking about getting access to a piece of ownership in this company. And what's even funnier is if you were to compare this stock versus Bitcoin and Ethereum in the same time frame from that low, you can see here that this stock has consistently outperformed them no matter where you would have entered back in 2023. This thing is up on average between 1,500% to 2,000%, whereas Bitcoin and Ethereum would have been up anywhere from 200% to 100%. In other words, by getting access to this stock, you're not just buying a stock, you're buying access to selling digital products in a regulated manner to institutions as they want to enter the space and as they want to get access to things like XRP, Bitcoin, Solana, Ethereum, whatever the case may be. So it's kind of like you own a piece of that entire portion of their digital real estate. So one more time, if you haven't already, head on over to DeFi Tech. Okay, and if you want to get access to any of those ETPs, you can do that through Valor. The link would be right here, and you can just go ahead and view Valor products. So go to valor.com and you can view Valor products by going to valor.com, right? DeFi Tech is the parent company. This is one of their companies that they own inside of that umbrella. And here's where you can access those digital assets, or you can simply buy the stock in the US, and their ticker is DEFTF. That's the US ticker. So if you want access to that stock, you can do that as well. Let's get back into the video. So if we actually end up seeing an interest rate cut, that could actually be the end of this long drawn out bull market that happened through 2023 and 2024. Yes, it was actually a long time. People were saying the bull market's coming. It was already here. It's just might not have been as strong as we would have liked. However, we're going to talk about what Michael Hartnett has to say about that first interest rate cut and the 2 major readings that the Fed is going to look at in order to determine whether or not they should cut interest rates. So one of those, right, they talk about is the PCE inflation reading. And actually on Wednesday, so you might be watching this by that point, that they're going to show the core CPI. And if we get a core CPI that is the exact same, that's not a really good signal. That would signal that inflation is far more sticky than we would expect. And so the Fed wants this down to 2%, and that's what they remain committed to. The next major thing that they're going to be looking at is initial jobless claims. And we're going to get one on August 15th, and we're going to get another reading on August 22nd. So if these continue to climb, okay, we start getting higher readings than the forecast, that is not a good signal. And that could be an indicator that they're ready to start cutting rates. But I think the major thing that they're really going to look at is going to come in on Friday, August 30th with the core PCE. I think if this remains relatively sticky, that is not a good indicator that they're going to want to cut rates too quickly while jobs continue to be lost, right? People are filing those jobless claims, and then the unemployment rate rises. With the current weakness in the market, in virtually all sectors, I think they're going to be forced to cut rates. And on that first rate cut is typically when you want to sell, according to Michael Hartnett. So yes, it actually might be counterintuitive, but the first rate cut is typically when you want to get out. Most people would say, well, no, that's going to ease the economy, right? It's going to create for an environment where borrowing is easier and the debt burdens are lighter, and so we should have more economic activity. But that's not what Michael Hartnett says. He says him and his team have studied the past 12 rate cutting cycles going back to 1970 and identified 3 varieties of rate cuts, and it's described here. Based on all of the information and research they've done, and Bank of America is no small company with no small team. They have some of the smartest minds and analysts in the world. We say sell the first rate cut. Hartnett said surging global central bank rate cuts were signs that the economy was in for a rough stretch. This tends to occur when the economy is in trouble. In other words, the rate cuts actually happen in response to a rough stretch in the economy, not because they're like, oh, everything is good and dandy now. Does that make sense? Now, seeing as XRP has failed to actually break out, if we get a rate cut sometime in September between 50 basis points or even maybe 75 basis points, that would be a very strong indicator that the economy and the market is in for a rough patch. And based on that information alone, we might be in for a situation where XRP continues to sell off and dumps back into this 38-cent range, even potentially down to 30 cents. Now, in that type of an environment, I will be accumulating. I will be dollar cost averaging, but I don't want to just toss all of my eggs into that one basket all at once. Instead, I think it would be good to practice good risk management and dollar cost average throughout this range, especially if you believe, right, once it hits these ranges, it's far more likely to bounce and then finally break out to new all-time highs. So I hope you learned something in this video, got value. If you did, click the like button, smash the subscribe button. It really helps the channel out. And then go and click on the link below to go to bullrunners.com to learn how to earn crypto in less than 10 minutes per day with the #1 play to earn XRP game. So if, for example, you're already holding XRP or you're thinking about accumulating XRP, you might as well put it to work for you to earn crypto. And this is a great way to hedge against volatility, potentially reduce your risk, stack those bags. It's the all market solution. So it doesn't matter if it's a bear market, right? This is a great way to hedge. On the flip side, if it's a bull market and you're doing this, it's even better because then you're stacking your bags into a major new all-time high. So there's no reason you shouldn't take advantage of this deal over at bullrunners.com. Go ahead and check it out. You can do it in 3 very simple steps. And I look forward to seeing you on the other side, my friend. Goodbye.